Hello, how are you doing? So as we spoke about last discussions that we had, like I wanted to talk to you about a possible deal with you.
Yeah.
So yeah, thank you for having the time to do this with me today. And yeah, we're looking for an investment of $100 million for what we previously discussed,
Yeah.
so that we can move forward with this business that is like revolutionizing like the space in the aerospace industry.
Yeah.
And we feel value that your venture capital, like it's an excellent partner for us. So we would love to talk to you and decide what to do with this deal.
Yeah, sure. Even I'm happy to invest here because this is in nascent stage and I think it has future. So I'm willing to give $100 million. But yeah, let's see how this deal goes on.
Of course, like I know that you probably have some interest that we can mutually talk to about, and like like there's a certain degrees to the deal that we should definitely talk about. So first of all, let's discuss about like the equity amount to have for you to have in this investment. So like for $100 million, like after this investment, like the company will be valued in a little bit more than $300 million, like the whole company. So that would like let you get like an equity of 30% if you're good with that.
Okay, so uh, this looks like little bit difficult. So we can talk this topic along with some other topic also.
Yeah.
Yeah. Just a minute.
Yeah, take your time.
Okay, yeah, we can talk this topic along with the CEO replacement provision, which is based on performance. So, how do you see your
Okay.
revenues growing in the next few years?
Like in the next 5 years, we foresee this to be like a billion-dollar company. With your investment, we'll be able to acquire at least six or to seven more like SRVs, like the shuttles, LRVs vehicles,
Yeah.
and that will potentially increase the revenue a lot. Like we value what you bring, so based on that, like we believe that in the next five years or so, you can recoup 10 times amount what you will invest today. So I don't foresee like this going down. It's we're the only like, sole proprietary owners of this technology.
Yeah.
No one else in the industry can do what we do. So it's for me it's a no-brainer. Like we don't feel that it will go down.
Okay, so your projections, can you say more about your projections, like how it will be $1 billion? So you must be having some conservative, moderate, and aggressive projections. So what will be your conservative, what will be your moderate, and what will be your aggressive projections for the next 5 years?
For the next 5 years, like as any business at this early stage, like you can have dreams, like we foresee that we could be a billion-dollar company, but a more like conservative projections. I don't, like the values like are not yet determined because we don't know like the market trends. But like the conservative, we can be in like in around the 300s, 400s,
Okay.
like as a very conservative projection for within the next 5 years, if not more. But as I said, like we are the only ones that can have this technology. If someone wants to do what we want, they have to pay us a lot of money, but we're not willing to give the technology to them. So we're the only like we're basically a monopoly right now. So this technology is for us. So that is like one of the main benefits of this company.
Okay, so this is 300, 400 conservative projection for the next 5 years. It's like total of 5 years, right? 300 to 400.
A little like in the next 5 years, yeah, like 400, 500 maybe,
Okay, and
like half a billion, yeah.
okay, okay. And then what are your moderate and aggressive projections for next 5 years?
Like the aggressive is definitely reaching the goal of a billion.
Yeah.
Like that will be like a very aggressive projection.
Yeah.
But we feel that if the business goes in the way that it's going right now,
Yeah.
we can get there. Again, this is aggressive projection. We need to need new customers, more vendors or partners that can help us go to space, like as we have been done in the trials.
Yeah.
and then like a moderate in the ranges of 700s. That will be like a good numbers for us.
Okay. Yeah, I'm very much optimistic about this because we are not just investing into this relation in monetary terms. It's like no, long-term relationship also. So we don't want to seen just as an investment partner. We also want to be seen as people who are making industry revolutionizing success possible. So
Yeah, that is exactly what we're looking for. We don't want an investor that wants like short-term profits, but to look at the long-term vision that we have. You know, that's something that I really value and that like I'm looking for in a VC to bring on to my company. So that's something that thank you for saying that because that aligns exactly with what I was thinking.
yeah. So what if you don't get this $1 billion projections within next 5 years? So as you are founder and you are the CEO of this company also. So what course of action should investors take?
Like if like again like $1 billion is a very aggressive projection. So like what other costs? Like I've been running this company and I'm fully invested in this company, and no one knows the technology that I built. Anyone else in the world than I am. So like I know this that I can be like a very good partner with you. Uh, Course of actions. We can have discussions, like maybe like brainstorm ideas. Uh, or something to like get a possible next stage of like if I'm doing something wrong, I can have like consultants come here and help us build a much better strategy moving forward. But I've been running this. I don't foresee not running the company like ever. So I'm fully invested in, and I'm not planning going anywhere else, starting any company anywhere else, or going to any company anywhere else or selling. I'm fully invested here. So my goal is again to try to reach the much money to get like us profits as soon as possible and to get this thing skyrocket to the moon.
Yeah, I appreciate your passion, but what I was thinking was like, and I agree with your aggressive goals also, whatever you have said, positive and negative things, that this is very nascent industry where people don't know how it will go. But what I want to say is like, I should be having that option where if I don't get this aggressive projections, then we will have to hire some other professional CEO, like how Uber has a professional CEO. He's not a founder. Although you can stay in board of directors, you will have all your rights as a founder. But I was thinking based on those lines.
I mean, as I said, like I've been running this company since day one. Like I would like to keep being the head of this company because it's my life. Like no one else has done it. So although I appreciate your vision of bringing someone in rather than like making someone else a CEO, bringing into like as I said like as a consultant like hired to help me and help between us reach the goals that we both want ultimately. Because as I said, like ultimately the profits for this company, it's what makes the company keep running, you know?
Yeah.
So that's something that I would definitely consider. If you want to bring someone external to help me out, make decisions, and them will have my full support, I'm happy to do that.
Yeah. So it's not like we would constantly disregard you. So it's not like we will just say, okay, we don't value your inputs. It's your baby. I appreciate that, and I know I value that. I was just saying like somebody who would be going after this aggressive projections. So my main concern was that. Otherwise, what I was thinking is like $300 million valuation is very high. So I can accept some high value, but it should be according to the projections for next 5 years. Otherwise, there should be some fallback value where if somebody doesn't meet the projections, then there should be some actions to be taken.
Okay, so equity percentage wise, what are you thinking based on what you just said?
I was thinking more on the lines of, so are you sure about your aggressive projections? Based on that, I can think about my equity.
Again, like aggressive projections are very aggressive projections.
Yeah.
Like every company has aggressive projections that sometimes they do make it and sometimes they don't. So we can definitely work towards that. But as I said, aggressive projections. I'm more into like confident and the moderate to the conservative projections. That is a range that I can confidently say that we can make that. But again, like aggressive projections to reaching the billion, it's a very aggressive path that I will work very hard. But as I said, like I'm more confident in the conservative to the moderate range right now.
So for conservative, what I'm thinking is like the valuation should be $150 million, and for moderate, I'm thinking it should be $200 million. And that's why I was saying that we will discuss these 2 points together simultaneously, like how much equity I should be getting and what should be the
The
projections.
projections.
Yeah, so that there should be some action to be taken, like somebody who's professional CEO, like you are more of a R&D guy and you have built this company, that I know, but emotions and ego should not trump logic. So that was the main reason. Like people should not say this is my baby, and people should not take wrong decisions and screw up this very nice company, because yeah, even I'm very optimistic about this. Yeah, and so it's not just like I would be infusing the capital, I would be helping in recruiting outstanding board members and top management. So it's not just like I have given money and that's it, you figure it out yourself. Then I would be offering my network also, and then helping this company to find a potential buyer in future. If we both agree that we have reached a stage where we are both happy, or we can even go public in future. I can even provide access to my network of industry professionals and even recommend company strategy based on industry expertise. So it's not just simply money. So these are the values I want to bring along with capital. So
Yeah. I understand that, that's exactly what we're looking in your partnership. Like we just don't want the money. We want like a partnership to work together closely to get this thing out of, like, again, as I said, like to make the best possible company.
yeah,
So we really appreciate that we're like on the same page,
yeah,
because that is exactly one of the no deals that we wanted. If someone was not committed into the company, we wouldn't be able to do a deal with them. So what you just said, like, gives me more relaxed that you're willing to work with us and bring your value, and we understand the value that you bring to this company.
yeah.
So that's exactly what we were thinking about. So
Yeah, so I could give $100 million based on like if projections are conservative, then $150 million would be the valuation.
okay.
And if projections are moderate, then $200 million would be the valuation. And this $100 million will help for next stage development. It will also help our company become cash flow positive business, and it will also help have a small fleet of suborbital RLVs. So yeah, we are more excited to have this partnership and have this company running.
Right. So again, so based on the conservative valuation of 100, you said 150,
Yeah,
right?
yeah.
And the moderate for 250.
200.
200, yeah, it's exactly 250. So equity wise, what are you thinking for those type of valuation that you just said?
So if valuation is 150, then equity is 67%, and if valuation is 200, then equity is 50%.
Okay, yeah, no, that's a little bit too high for what we're willing to give right now, because we own this out of everything. So I believe that giving more than 50% is just like not 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 a point to talk about in this stage in our lives. However, like if we agree right now to a lower valuation,
Yeah.
I can give you the option of being like a preferred like stock owner, so that next time in the case that we need to raise more capital, you will be the only ones in the bid to get more stocks into the company. So that's something that I'm willing to do. But the valuation right now, just for the 100 million, not needs to be stayed in the 40% range.
40% looks little bit difficult, but still we can decide about other things also along with this. So what will happen if projections are not met? So will there be some clause where board of directors have the option to hire another CEO next time in next year? Like if second year, if projections are not met, then we will hire another CEO in third year.
I mean, like I said, like the board of direction can have the option to bring someone external to work directly with me and make the decisions collectively. Like I will value everything that he adds and also take into consideration the board of directors and collectively make a decision. But like I'm as I said, I'm open to someone coming in and helping me. And mainly when the consultant is here or something, or with the expertise enough, like to be like a second co-COO, to say it like that, I will definitely like support him in any decision that he might tell me, and I have no problem in doing that. And that
Okay.
will help, like as I said, like we believe that we can meet the numbers, but if that is the case, I have no problem in bringing a consultant in to help us and like fully support him in the decisions and take the course of actions as long as he's like a co-CEO.
Okay. I think the valuation of equity of 40% is like very less, but still, let's see. And then what about the dividends?
We can work it out. Like if we keep the equity at 40%, we usually don't give dividends to anyone. But if that's a thing that like interests you, like and keep the equity at 40%, I'm willing to give you dividends at around 2% dividends, and that's something that we have never done to anyone else in this company, and that will get you out like a lot of money at the end of every year because we have to pay them.
Okay, so generally all the companies that we invest in and the industry standard is 8%. So we are looking at that amount for dividends.
Yeah, but like the companies that you're currently working are already well established in the market, right?
No, they are still asking for funding. So we fund in seed stage also and then exit stage also. So in all stages of the companies.
Yeah, so like what because of the budget that we have, like even though like the other companies may give more dividends or something, yeah, we're like in the early stages, but with your investment, we'll be able to be big. So like with a 40% equity percentage and let's say a 3% dividend rate, I think that that's like a good starting point. And then later on, like in 2 3 years, we can have like a clause to increase that in the case that we're making the numbers. But right now, what we can afford is maximum 3% dividend rate.
Okay, and then what are the type of stocks that you would be offering? So common, convertible, redeemable.
Like that's type of stock that like it's like we have to talk to you. Like we prefer to give you common stock because we believe that that like adds value and like uh, you'll always have there. Like you won't be able to you will be able to do whatever you want with that stock. So no one gives you like restrictions on it. So that's something that we're looking interested in.
Okay, I was more into looking into redeemable.
In redeemable stock.
Yeah.
I mean, like right now, as I said, like in these current stages, like common stock, it is preferred. But what about if we do the convertible one? Like if for example in the next round of funding or something, you can convert that stock and get back your money, and also convert that into common stock. So um, you'll still have like a game in the company, and you won't be diluted. So I think that's a fair deal for both of us. Like, if in the case that like we need to get more stocks, you won't be diluted, and you'll just convert your preferred stock, your convertible, into like common stock, and that's I believe that that's something that like anyone will be able to do, like interested in. So
So can we have this like, can I have the option of having all three type of stocks, common, convertible, and redeemable? So I'll distribute all my stocks into equally three parts.
that's I think that's a little bit more complicated right now. Like to like be have like in the contract have three different stocks. We should try to agree on only one type of stock, and then that like it will be easier to move forward. Like get the hard stuff out of the way and just like keep us within like the easy like and sign on an agreement of one type of stock. because all of our partners have one type of stock, so it wouldn't be fair to the other like board of directors to have only one type of stock and give like the new venture capital like three type of stock, you know. So like we would prefer to keep anything under like one type of stock per investor.
Okay, and what about anti-dilution rights?
We're willing to give you the VC right of first refusal. So in the case uh, of that we need to do as I said in the beginning of this conversation, like in the case of needed more funding, you will be the first and preferred. You will like give you a chance to buy like the stock before anyone else, so that it will like increase the equity that you will have inside the company. So no one else will be able to do that if we do the VC right of first refusal.
Okay, and what about board of directors, board members?
We definitely value the opportunity of working together. So are you do you want like to have a seat in the table or for board of directors?
Yeah, so I think right now there are three board members, one of
We're
them
three.
is you,
Correct.
and two are independent.
Correct.
So I wanted that option to have somebody who would be on board members so that they can see oversee how the company is functioning.
Yeah, absolutely. Like that is one of your interests, and I absolutely would love to have you in the table. Um, right now because I'm a person like who likes to have everything close. Like the closer the people to me, the better, so that we can work together anytime. So we will be willing to give you like one seat member in the board so that you can have representation, and that member like will be really important to our team. So we'll be a team of four.
Okay. And what about vesting of your shares? So how long are you planning to stay in this company?
Oh, I'm planning on staying here like for the rest of my life because I this is my company. But like if it's important to you and like for me to gain your trust, I'm willing to do the vesting of founder shares of 3 years or less because I know that I'm fully committed. So you will know that I'm fully committed in this company since day one. Even talking right now, you know the passion that I have for this company. So I don't plan going anywhere else. So like if you like to build that trust that you have in me and like we can trust each other, yeah, like 3 years or less will be a good option for us.
And what about no shop provision?
The no-show provision is something that it's very complicated right now in the market. Like we would rather not have it because it is something that we don't feel like add value. Like we are completely invested in here. I will not um, go anywhere else or something. So we like try not to include it just to keep everything simple. And yeah, so that's something that like we feel like doesn't add value to anything. So like we'll just try to keep it simple, like not to include it. Pretty much that's it.
Okay, so with all these conditions, I think how much is the valuation now? You are saying 300.
The valuation now that I'm seeing right now with your investment will be around $300 million. Yes.
Um, so with all these conditions, it looks little difficult to have $300 million. So what I can see is like let me see with all these conditions. Just let me get it. So what my thoughts are of, so for type of stock I'm preferring redeemable, and for dividends like 3% is very low, so I'm looking with something which is more than 10%. For anti-dilution I would be, yeah, that, okay, that I agree.
Okay.
Yeah, for VC appointed board members I'm looking for something who has like more than 3 members, and for vesting I'm looking somebody for more than 5 years. For I would be needing something which would be having some kind of CEO replacement provision also, because I would be, I'm more of that kind of person who would be giving 100% independence to anybody who's running that company and who is willing to give those results. And I would also be looking for no shock provision, because $300 million is like very high amount for me to invest now.
Yeah, like I completely understand that. Like we can definitely work out in the ones that you're having doubt about. Like in the dividend range, I can definitely tell you like 10%. It's definitely a no go. Like that's something that we cannot afford, and we aren't doing this to anyone else in our company. So that will be like unfair to anyone. And if we give dividends to every single one, like the profits will go down for everyone, not only you, but us. So like I'm giving you a preference with the dividends. So if I give you 5% dividends, I think that'll be fair, but we cannot go any higher than 5%, and that will like put us like in a difficult position right now because we usually don't do dividends. But let's meet in the middle, like you said, 10%. But yeah, that's something that like we cannot afford right now, so we cannot pay you 10%. If not, we will like not include dividends because like we're willing to give you dividends, and but like if it's 10%, we're not able, like, not that we're not willing, we're not able to afford it. Like we cannot pay you that.
Generally, the industry standard is 8% only. Less than that, it's like very less. So that's why. And all other companies that we have invested in are giving 8%.
Right. So, like I said, like we're in the very early stages, and maybe the other companies have done dividends all their life, but like we have like in the early stages that we're just like basically still in R&Ds. Like we already have the technology, but we still need to build the other vehicles so that we can increase our fleet of numbers. So, like 5% is the maximum that we can do in dividends. If not, like I'm sorry, like we won't be able to afford anything more than that.
So I'm looking for then $150 valuation, so that I would be needing 67 percentage of equity.
No, that's 57. 67.
67.
No, that's impossible. Like we won't be able like to be talking right now. If you want 67%, that'll definitely like stop all the conversations, and like I'll talk to my board of directors and maybe seek funding elsewhere. But I value what your company brings to our company, and we really like preferred like you guys. So that's why like we should try to agree on the other type of points so that we can like mitigate that value, because more than, as I said, more than 50% is something that we're not looking at right now, and that like affects the deal substantially. So you said the vesting of founder shares, you were looking at 5 years.
Yeah.
Okay, I'm like that I'm invested here, so I'm willing to go to 4. That's more than what you wanted to give. So if I go to 4, I think that it's like a reasonable amount. And you have my commitment that I won't go anywhere, and I'll prove you that like this is my company, and like there's nowhere else I would be. So in the vesting of founder shares, I will go to 4.
Okay. And then I would be needing something like having the option to have another guy as CEO if this projections are not met. Like now you are the complete CEO and nobody is interfering. That way I would be needing somebody else so in case projections are not met.
Okay, so let's say that I agree, but I will still be able to be in the board of directors, right?
Yeah,
Like
yeah,
I'm not
yeah,
going
you will.
anywhere.
Yeah, you will
I'll
have.
still have make to be able to decision to talk to
Yeah,
this new guy, right?
yeah, yeah, you will have.
So if we agree, like
And
it's
even
for me
if
stepping down.
yeah, and even if that guy can be replaced if he doesn't perform. So
Yeah, no.
we can, like, I can give that.
So if I am to be stepping down of the company that I built from scratch, that it's being successful right now with the plans, I would like go with the conservative because I feel that those numbers are reachable and like we can definitely get those numbers every single year. So if someone's going to replace me, they'll have to come in and be a much better. But like I commit that the conservative numbers will be able to meet them every single year.
Okay, but with conservative estimates, $300 million is like out of reach for me because I was thinking all this according to aggressive projections. I was okay with like less equity.
Yeah, no, there's no way I'm agreeing to like an aggressive projections. Like as I said, like aggressive are they are aggressive. Like I know that your firm wants like aggressive projections all the time, but in reality, when was the last time that another of your firms made an aggressive projection in the first year? That's something very difficult to achieve, and you know that. Like so, let's try to work together. Even like the moderate projections, I'm willing to go to the moderate projections, and then if we don't meet those, a new CEO can come in, and I stay in the board of directors.
But that way, okay, I can agree for moderate projections, but that way I would be needing at least 50% of the company. Like we can decrease the valuation for 200. With aggressive, we can keep for 300.
No, and aggressive, we cannot do that. Like it's impossible. So in moderate projections, as we said, like I can give you 40%, 5% dividends. That will add you like to like theoretically to a 45% equity, and then like in the convertible preferred stocks, that'll like give you an advantage over anyone else in this company, and I believe that's a good like amount right now and in this initial stage of the company.
Yeah. So 40% valuation looks like very difficult for me with these terms and conditions. So I'm okay with convertible, but I'm looking for this way. I would be looking for more than 50%. At least we can say at least 51%. Because even board of members is very less. So I'm not negotiating on that. I'm not negotiating much on vesting of founders or like CEO replacement provision where you would be seeing on moderate.
Moderate.
Yeah. So with moderate projections, I'll have to increase my share in the company. With aggressive, I can say whatever you are saying, like your terms and conditions, I can agree. With
Okay.
conservative, I wouldn't be even getting my return properly. So
Okay.
that's
What about this? Like, this is something that I like we're not contemplating, but I'm willing to do it because I really like know the value that your company
yeah, sure.
can bring to the table. I'm willing to give you 45% equity, but that will reduce the dividends to 3% back instead of the five that I told you initially. And like yes, I like I'm willing to give you like one board member in in the table. And as we discussed, like we can keep the 5 years of the vesting of founders of shares that we previously discussed. And I agree to the moderate projections of the CEO replacement. And yeah, the convertible preferred stocks that we have previously discussed.
So the equity would be how much? 45.
45%. And you have the convertible preferred. And and the VC right of refusal that like will let you buy more equity even if we are necessary of getting more funding. So that can increase you more right now. But 45% is like the absolute maximum that we're at this stage of the company willing to give you because we understand the value that it can bring to us.
Okay, so 45% is little bit very high for me. So can we decide on this no shop provision? Because 45% is like out of range for me. What I got from my seniors is like go nothing below like one set of values, which is, and 45% comes into that.
But like the no shop provision, like, do you think it's a fair game? Like to only have this? Like you have done many deals. I assume that you have done many deals, and you are always allowed to talk to someone else in the industry. So again, we can have a deal, but like I'm telling you, and I can give you the confidence of trust that we are like that you are the ones. The VC that we want to partner because of all the value you add. But you never know what the future might bring, and maybe this deal doesn't come through or something, and we will need to reach out funding elsewhere. But we would really like to be able to speak to someone else uh, apart from you. However, like we understand the value, and I can give you like a word of my trust that you are like the one that we want in our company. To be honest.
So this way I'm looking for some higher equity in the company because I'm looking for redeemable type of stock, but still I'm compromising there. The dividend industry standard is 8%, still I'm compromising there. I'm not asking for higher board of members, only one member would be on my side who wouldn't be like there are already two members who you have appointed. So I don't have much say even though I'm investing. But still this is one point of concern. Like 40%, 45% is very low amount as equity in the company.
It is a lot. Like it's almost half of it, like, and I am the owner, so what, like, something that I want you to trust. Like I know this company from bottom up. If I leave today, like you won't be able to do as good as we are doing right now. So like 45% right now, it's more than what I was willing to give. So I believe that's a good amount of money of equity share percentage in the company. So that is something that like we like right now, like I unfortunately don't have more flexibility. We can agree to something else, but equity share like 45% is already a lot for me.
I was asking this because this is like very new industry and there are a lot of changes in market. And then there are rise of strong competitors also, like we can see SpaceX is also coming and there is Blue Origin, there is Virgin Atlantic who is also sending people on space travel. And then there will be changes in regulation also. And yeah, and there would be new people coming into the market. So we don't want to go to them. We just want to invest in your company. So those are my concerns, and I'm looking on risk to reward ratio also. So which is like very high. So that is the reason I was looking for something else.
Yeah, like as I said, like I already agreed to step down as a CDO. That's something that I was not contemplating before we started the conversation. Um, so what about this? You still get the 45% equity, as we did for the type of stock we do the convertible preferred. Dividends, we will have to stay because of that at 3%. Then for the anti-dilution rights, we will have the VC right of first refusal. I give you one member. I agree to 5 years of the founders of shares vesting. We agree to the moderate projections, and if you want, because I know the deal that you want, I'll give you the provision, the no shot provision. I'll include it in the contract.
Okay, so VC right of refusal is what I would be having.
The VC right of you will be having that. Yes, correct.
Okay. So as there is nothing where you can do for dividends, we can at least increase the board of members so that I would also be having some say, as I am not having any say now in the company with less than 50% of equity.
So, okay, so if
Because
I give you more members, then uh, I'm willing to go down in the vesting founders of shares. I can give you two members in the seat. That's why we're five, and that is like a bigger table than what we are like coming in right now. As I said, like we like to keep like a close team in the board of directors because the decisions are made there. So if I give you two members, that'll get you like the two independent that we have right now, plus more like the other two that you have.
yeah.
That's a fair deal. So everyone's equally.
Okay. And I'm looking for like higher share of equity. I'm still looking for it because this
Yeah.
is like very big point of concern. I'm still in minority in board members with
So
two
you're
members.
not minority board members. You have two.
I have two, but there are three already who are from your side, two
I
independent.
mean, like it's two on like me and like you need like the decisions of everyone. Like I'm I don't have like allies. Once something is in the table, anyone can provide their expertise, and we all vote on that. There's like no contact before any board meeting. Every decision gets made there, and that's that's something that I believe like it's a fair deal right now. And as I said, like you wanted to give the provision, and I'm giving you the provision. That's something that was out of the table for me, but because I value what you bring, I'm willing to give that to you, so that I don't kick to any other VC as soon as we leave this meeting.
Yeah. So what I'm thinking, like there are new competitors coming to the market also. So I'm looking for higher VC equity. So
I mean, the competition can come in, but like doesn't affect ours internally. We have the patents, so if competition comes, they have to pay us. Like we have the technology, no one else has. We're the sole proprietor of that technology. So like that's one out of scope right now. Like we technically don't have that competition right now. Maybe it's a speculation, or they are coming in the future. But as of right now, we are the ones capable of manufacturing this vehicle to start the tours on the USA, on the USA, on the space.
yeah. And it's like very small company, so 35 members. So I'm looking for some higher VC percentage. I'm looking for 50%.
Yeah, no, as I said, like 50%. I'll give you the 45%, and then I'll give you the dividends to 5% instead of three that I said before.
Okay, we can move it to 46%.
46? No, 45, and then I'll move to 6% dividends.
No, we can
That'll
make
that'll
it.
give you that'll give you a lot of money.
We can make 8% of dividends with 45%. 8%. Because 8%
dividends?
is, yeah, that is
No,
industry standard.
no, 7%, and I agreed to 7% dividend.
We can move it then VC to 46%.
No. VC stays at 45, and then as I said, like I'll give you two members of the board, so that compensates, and you'll have like a say in the table. So I think that's a fair deal right now.
And what about vesting? Vesting would be
Vesting, I said 5 years.
okay. So type of stock we can at least make it redeemable because that is my preference. And then we can finalize this deal. Okay. Because
Okay, so yeah, so what do we say? So 45%. Okay, so like you said, 46% equity, right? Instead,
yeah.
and we keep the convertible preferred. That's what you asked for me before, and we had the convertible preferred. So I'll give you the 46%, and we keep the type of stock as convertible preferred.
Okay, I'm compromising here. No, I'm thinking of more. I can keep. Okay, that's okay. I can keep 46%.
Okay, so just to make sure, so that we can
Yeah.
record here.
Yeah.
So VC equity will be 46%.
Yeah.
The type of stock will be convertible preferred.
Yeah.
Dividends will be 7%.
Yeah.
Anti-dilution rights will be VC right of first refusal.
Yeah.
Board members will be 2.
Yeah.
Vesting of founder shares will be 5.
Yeah.
Then the CEO replacement will be moderate.
Yeah. So if CEO replacement provision is there, we can have aggressive projections.
No, like because like in the moderate protections, like it's completely different. It's like in the midpoint, you know.
But if anyway CEO is getting replaced, I have the power to fire the CEO and hire some other external guy.
Right, but like the projections, like you know, like it's more complicated right now because if I agree to an moderate, we can. It's like a doable thing. Aggressive is like to be really honest, like out of reach. So it's either moderate protections or I will not be considering like adding this clause into the deal.
Uh, because I was more thinking on this aggressive. Okay, so and then no shop provision is present.
Included, yes.
Okay, okay, then we can make a deal.
Okay, sounds good.
Thank you. Nice dealing with you.